subscribe.
Stop paying taxes.
Woo!
Legally.
Woo! I was about to say disclaimer, legally.
The probably after housing, food, and transportation, most businesses, or at least small business owners, biggest concern and probably biggest outgo is taxes.
Yep.
If you don't structure it properly.
Or prepare for it.
Prepare for it, absolutely.
Yeah.
Preparation.
Man.
So we're going to talk a little bit today about tax avoidance, which is legal, versus tax evasion.
That don't sound legal.
Which
Every time you evade something else, illegal.
and is not legal. So, George, what are a couple of things you've done to legally avoid taxes, or so it doesn't sound so bad, which is perfectly legal? Put it in a different light. Decrease the amount of taxes that you would otherwise owe if you didn't understand the tax code.
Those write-offs, all those expenses that you do from January 1st to December 31st that you can write off, whether it's, I'm in the transportation business, whether it's the vehicles, insurance, maintenance, paying my drivers, all that is write-offs. All those are write-offs.
As long as you keep proper records.
You gotta keep proper records. I mean, I'll tell people, you got you got a couple of these things that you use $25-$30 a month that keep track of all your expenses. QuickBooks, for example, that's one of the ones I use, and it makes it easier when I send it to my CPA, because at the end of the year I can just download all my expenses and then upload it to them. So no longer keeping all those receipt books like I did 5 years ago. I click a document, send it over to her. I don't have to meet with her or nothing.
So keep track of your
Expenses.
Legal expenses. What do you do? What do you send your CPA? I know you got a CPA that you load up every month and every quarter. What do you send your CPA?
That's a good question, Jim. I found ways to create tax shelters. And I'm gonna give you an example. I used to trade in my name, Ronald Jean Crook.
Now everybody knows who you are.
Oh my God. We'll edit that part out. Now I trade under my LLC, which gives me a tax advantage and lowers my my tax bracket. Because I'm trading under a LLC who does taxes under a C Corp. So now my company is paying for the taxes, and it's about 21% a year.
All right. One of the ways in real estate that we've reduced our tax burden, at least in the state of Texas, if you own or finance a property, you're getting paid over the life of the loan.
So 35 years.
So you do not pay the capital gains tax on the sale of that property until you receive the very last installment payment. So if you choose in real estate to do owner finance, where you become the bank, you sell the house to the people that are going to live there, and instead of them going somewhere else and getting a mortgage, you provide that mortgage for them on their behalf. When you sell the property, the deed transfers to them. They're completely responsible for the house. You now become the bank. They pay you every month on a pre-agreed interest rate and term, and until they make that very last payment, you have not sold the house yet.
So it may take 35 years.
So it could take, I mean, some of them, they have paid off the loan in 12 months, some 24 months, but we've got loans that have been going on for 8 years now, and until that very last installment payment is paid, I haven't legally sold the house.
So then you can prep to kind of figure out how you're gonna,
So we still owe taxes on the interest that we receive every month, but we don't pay taxes on the principal portion of the.
I didn't know that.
And we don't pay taxes. Say we bought the house for $100,000, we sold it for $150,000 after doing repairs. We immediately get to write off the repairs, legal tax avoidance. but we don't pay the difference in the 100 and the 150 less the repair cost until the very last, like I said, installment payment is made on that loan. So a legal way to avoid taxes. And if you watch our previous video about borrowing from yourself, if I borrowed the money from my life insurance, the interest that is due back to my life insurance policy is a legal tax write-off. It would be just like borrowing the money from a bank or other financial institution. Interest that you pay on a loan is a legal tax write-off.
And you know, Jim, I like to do what's called double dipping.
Well, of course you do.
Let me explain to you. My tax write-offs are usually my toys. So I get to write it off and I get to get a new toy. Like I just bought a 45-inch string that curves around. It can curve around both of us.
Yeah, I've seen your screen.
So number one, I'm using them for trading, so it's a tax write-off. Number two, it's a toy when I'm on my Xbox. You know, that new G-Wagon you want, it's a tax deduction, and it's a toy.
That G-Wagon, huh?
I guess I just found out about that.
Man.
Yeah, we're trying to get Jim to
No.
climb up the ladder.
96 Ford F-150.
There you go. So a way to have your toys and make it tax deductible, that's the new word for the day, double dipping.
Yeah, but I would suggest that you check with your tax professional and see if it is going to be 100% write-off, or you only write off the portion of the time that you use that toy
For business,
for actual business.
Because remember, this is for education and entertainment purposes.
I don't want you to get caught in the evasion cycle, because evasion isn't pretty. Avoid, do not evade.
I think that's words we can live by, Jim.
There you go.
Do y'all best.
Quit paying taxes.
Follow and click the link below.
Legally.
Double dip.
Sound